In this video, I will share the best beginner price action strategy. It is easy to use, you will understand it immediately, and it can help you find better trades across all the time frames. So hello, welcome back, and let's get into today's special video about the best beginner price action strategy. It's very simple, very effective. And at the end of the video, I've also prepared another special, so make sure to watch the video until the end. And we are starting with a higher time frame perspective. This is the 60-minute chart. We will also have other examples later on in this video where we use the 4-hour, the daily, and other time frames as the higher time frame perspective. And what you want to do is very simple. You want to look for established ranges. You want to look for very, very strong support and resistance levels. And I made previous videos about how to find support and resistance levels. And what you are going to do is you simply draw a level around the last swing high and swing low. And by the way, this is a great example because there are multiple swing highs in this range, but we always want to go for the highest. We are not going to look for levels within the range. We are only going to look for the highest, simply because the highest level, that's often where the market and the price gravitates towards. And that is where often stop runs and bull and bear traps happen. So you want to make sure to stay away from lower levels, and you always want to go for the highest level within a range. And then you draw your resistance level on the highest point, and then you simply wait for the price to get to the level, and you want to see a fake out. So you really want to make sure that the price action is taking out the highest high across or beyond the last swing point. So here's our resistance high, and this is the candle that we have been waiting for. It takes out all the highs. There's probably a lot of stop hunts going on, a lot of bull and bear traps, a lot of failed breakouts, and you can see this is even an engulfing candle pattern. So this red candle completely engulfs the previous little green candle and even the candle before that. So it's a very, very strong selling signal. And we're going now to the lower time frame, to the exact same position when the price stopped here. And this is how it looks on the lower time frames. And here we have a very interesting double spike. So you can see the trend here led up back into the previous high and back to the ultimate high that we have marked on the previous slide. And you can see we have a double spike. And double spikes are very, very powerful because they show you that the microstructure on the lower time frame is actually trying to break out higher, but it is rejected not once and twice. And the market is always closing almost at the low of the candle. It's a very, very strong rejection signal. And after that, there's a very, very good chance that the market will actually continue selling off because it is a fake breakout on the higher time frame. And you can see the microstructure of the double spike here. And this is how it looks after a few more candles. So the market, after we left off here, the market completely collapsed back into the previous lows, and there are multiple ways how you could take profits. I will talk about this later on as well. And in the next examples, we will also take a look at how to time the entries using other techniques, price action, or other special tools. And this is just the first introduction. So it's a very, very simple approach. Simply look for the best support and resistance level within a range, wait for the price action to get there, make sure that you have an actual spike beyond the high, and look for a price action signal as well. Then you go to the lower time frame, and we will take a look at how to time those trades in a bit. Here's the next example. So we have a very, very strong zone here on the higher time frame, and we even chose, this is now the 15-minute higher time frame. And so this is an approach that you could also use or as a day trader. So you can use the 15-minute as a higher time frame, and then you go to the 5-minute. It's really up to you. This is a mechanic on the markets that happens across all the time frames and all the time. So you simply want to draw your level across the lowest low. You can see this was the lowest low. It lined up here, and then you can see here is another touch point, and this is what we've been waiting for. The market took out the lows, the absolute lows, and you have a pin bar signal here. So this is a very strong fake out signal. The market tried to break lower. A lot of people probably had their stop loss here. That's why it is so powerful, because it's the start of a bull trap or a bear trap in this case. And then we go to the lower time frame, to the exact position where this pin bar is forming. And we are using here now a moving average. The 20-period moving average is generally considered to be a good short to medium term moving average. And this is how the pin bar looks on the lower time frames. You can see the market is already jumping back back into the range above the support level that we drew. And what we are doing now is we wait for a breakout above the moving average. Sometimes you will get a break and a retest, which is even a stronger signal that I also trade. And this is what the outcome looks like. You can see we have the breakout of the moving average. We have a picture perfect pullback retest into the moving average, a very, very strong signal. And you can see the market then completely exploded after the rejection on the higher time frames. A third price action example. So the market is in a range market. This is the lowest low of the range, and we draw our level here. You can see the market dip back into the level here once. Didn't lead to a big reversal, but on the lower time frames, probably this was also tradable. And then we have another push, a double fake out. So very, very interesting. We have the first fake out here, and then the second fake out is happening here at an even deeper level. And sometimes those fake outs won't work out the first time. That's why it's so important to learn how to cut your losses and let your winning trades run. This is how it looks on the lower time frame, and we are going now. You can see the market immediately snapped back. So after the first signal didn't work out, we want to have a little bit more confirmation and confluence on our side, which we have now. We have the fake out bar and we have the confirmation bar of this huge momentum to the upside, which is a good thing to have on our side. And now we're going to look at the lower time frame perspective at exactly this point of this huge bullish bar. This is how it looks. I use a moving average here, and you can see we have broken the moving average. We can wait for a retest, but we can also use other tools like the daily pivot point, which is available in pretty much all charting and trading platforms, I think. And this is what happens afterwards. And you can see this is the daily pivot here in green. You can see every day the pivot obviously adjusts. And this is where we left off. You can see we broke above the moving average. And we have a breakout, a pullback into the daily pivot. This is a strategy that we also trade in the masterclass, where the link is in the description below. And there's a retest daily pivot strategy on the lower time frames. And you can see a break and a pullback is often a very, very strong signal that the market is now headed away from the pivot point. And you can see this is where we left off. This is where we had the second fake out on the higher time frame. And you can see the market shot up higher. A very early fake out is in this situation. The market was in a downtrend here. The downtrend stopped here for the first time, made a little bit of a pullback to the upside, and then came back a second time into the lows. You can see we have a fake out. The market is still trading very close to the support level. So when we go to the lower time frame, we probably need to wait a little bit longer. But that's the main, or one of the main points is that you make sure to not just trade blindly fake outs. That's where many people lose money. They think fake outs don't work, but it's usually because they have a very bad approach. You cannot trade them blindly. You need more information. And we're going now to the lower time frame. And on the lower time frame, we can see we have a very nice triangle pattern actually. We can connect the lower highs here to get a very decent trend line in here. And what we are waiting for now is a break and a pullback into the trend line, which is a very, very strong signal that the trend direction is actually turning. So when the market breaks higher, we have a higher high. And when it makes the pullback, we have a higher low. And according to Dow theory, this is how trend changes happen when the market goes from lower lows and lower highs to higher highs and higher lows. And this is exactly what happens. So you have the breakout, you have the pullback back into the trend line, and you can see the market shot up higher, started a new uptrend after we had the pullback or the fake out on the higher time frame. Another example here, we have a higher time frame momentum fake out. We have the last swing high here. The market really shot strongly into this level, and many traders will be now scared or there are multiple things that could happen. Many traders think that the market has a higher tendency now to push higher because this is a huge bullish candle, and they will get into long trades too early. They will buy way too early before the market is actually taking out the high. And other traders are blindly taking a short here, which is also not a good idea. Yes, this may look like a good fake out, but it's not enough information. We need to go to the lower time frame to time our trade. This is how it looks on the lower time frame. You can see I put a moving average and the pivot point here. and you can see this is where the current pivot point is, this is where the moving average is, and we don't want to get into trades when the price action is so far away from the moving average. So we need to give it a little bit more time, wait for the moving average to catch up, wait for the pivot point to get up, and then we often find good trading opportunities once the two have been broken. And this will also help us to stay away from trades that are too early and not ready yet. And this is the outcome. You can see this is where we left off around here. This is where, or around here, this is where the moving average and the pivot was. Then on the next day, the moving average and the pivot point come much, much higher. This is then where the price action broke the pivot point and also the moving average. We are making lower lows and lower highs at this point. So it's a great trend change, and you can see even if we don't catch the absolute top, there's still a lot of room to the downside and enough potential profit that could have been made. And so this is a very special and a very easy and simple to understand strategy. Obviously there's a little bit more to it, how you place stops and how you place targets, manage your trade and risk management. But this is a great start. I would really encourage you to start paying attention to this on your charts. And now I have prepared something else, so stay tuned. And here we go again. And in the last two videos, I talked a lot about the masterclass, and I got a lot of questions. What is the Tradeciety masterclass? And I want to give you a little bit of an overview and an inside look actually in what to expect. So the masterclass, we decided to not offer trading courses for hundreds or even thousands of US dollars, but we put everything into one package. So the masterclass includes 8 trading strategies, 8 video courses with the best strategies, and even 2 weekly updates. Every Sunday and every Wednesday we send out a new video with the best trading opportunities. We break down the whole Forex market, and you can see it is as low as $70 US depending on VAT, where you live, but you get access and immediate access to all 8 trading courses. So we have a price action course, there's a supply and demand strategy course, day trading, trading as a business course, which is a psychology course. We even have a stock swing trading strategy, indicator strategies, Forex beginner course. So even if you're a new trader, you can just start with the Forex beginner course and then move on to the more advanced courses. We have a Renko strategy, and you have access once you enroll into hundreds and hundreds of special videos, recordings, webinars, and all of that. There's no long-term commitment. You can cancel anytime. You can access it on your phone, your tablet, or wherever you go. And this is how it actually looks once you have enrolled. So as I said, you have immediate access to all videos and all courses. There's no waiting time. And those are all the courses, and this is a very nice way to manage your courses or to watch it. So let's go into the Masterclass Foundation course. This is where many people start. And this is how it looks like. You have the different modules. You have different progress bars. You can watch them one after the other. There are always trade examples. There are additional information in the courses. In our trading psychology course, this is the trading as the business course, there are also a lot of workbooks waiting for you. So let's assume we go to week 6, where we talk about confidence. And here you have your workbooks in here. You can print them out. You can fill them out. And this is your and the goal is it is a one-stop shop. Everything that you need for your trading education is in one place. You don't need to pay hundreds and hundreds of US dollar. The goal is really that this is everything that a trader needs, from beginning trader to a very, very advanced trader. Everything is in there. So this is my little overview over the Tradeciety Masterclass. The link to that is in the description below. If you have questions, make sure to reach out to Rolf@Tradeciety.com or just at info@Tradeciety.com. Very happy to help out. And if you have any questions, you can also always leave a comment below the video. Happy trading!